Welcome to the CannaBiz Success Show. If you're a cannabis company owner or operator who's ready to scale your business, grow your profits, and plant the seeds to take your business to new heights, this show is for you. We'll share expert insights, industry trends, and actionable strategies to help you blaze a trail of success in the cannabis industry.
Welcome to the Cannabis Success Show. I'm your host, Guillermo Rodriguez. Today, we are talking to Seth Yakatan. He's the founder of Katan Associates. He's helped companies raise well over $1 billion in capital in his career, and he's helped over 22 companies exit successfully. He's clearly a wealth of knowledge. Today, we talk about raising capital in the cannabis space, the challenges, and what companies should do to prepare for a successful capital raise. At one point, we get into some very specific companies and examples that companies that are really thriving. I love what he has to say about what specific business models that he's seen be successful in the cannabis space. He goes through each one and provides an overview of what those business models look like. Make sure you stick around at the end when we talk about predictions for the coming year. He's got a lot to say about that. That's what's coming up right now. So enjoy the conversation with our amazing guest, Seth Yakatan. Welcome to the Cannabis Success Show, where we share conversations about successfully scaling profitability and cash flow in the cannabis industry. You know, one big area when it comes to building a successful business is obviously upfront capital, right? Getting the cash to get a business going and a business to keep going. And so today we are joined by Seth Yakatan. He is the co-founder of Katan and Associates. So I'm really excited to have you on the show today. Seth, how are you?
I'm great, thanks. Can you hear me okay?
I can hear you perfect.
Good. Yeah, I'm good. Thank you very much. Thanks for having me.
Good. So today we're going to dive into investing, right? We're going to talk more about investing. There's I think when you hear about cannabis investing, people think about a cannabis investor. But Seth, you work more on the advising side. Can you tell us a little bit more about your role as an investor on the advising side of things? You're not someone that's looking to invest in cannabis companies, right? But someone that helps others raise the capital as they're building cannabis companies.
I have made some investments. It's not my stock and trade. I'm actually a really bad investor. Usually, if I write a check into something, it's not going to do well. But yeah, I've helped a lot of people. I've helped a lot of companies, and I've kind of bridged that gap between the company and either the investor or the institution in terms of the entity raising capital. I've also done a lot of work on the M&A side, putting one company together with another company. And then, you know, in all of those conversations, you have a lot of different opinions, a lot of different stakeholders, a lot of different requirements. So it's really managing the complexities of that where I kind of come in.
So there might be folks listening in today. There's different types of capital, right? I'm a virtual CFO. We help our clients with getting a line of credit, right? Bank funding. That's more on the debt side of things. So there's equity capital and debt capital, and there's different capital markets. Where can you kind of break that down and just kind of share what are the basics of the different capital markets in terms of the kind of clients that you're working with and what types of companies that you work with?
Sure, you can make it really real. I'm not that smart, so I like to try and put everything into fairly simple analogies, which usually when it comes to investment, we talk about homes or banking. And when it comes to sales, I tend to talk about dating because it makes it just easy. So there's really only, if you think about it like your house, there's only two ways to raise capital for a company. There's equity and then there's debt. And if we think about it in the context of the purchase of a home, most people purchase a home with some amount of equity that they put in as a down payment, for lack of a better description. And the balance of that, they finance with a bank loan. Depending upon how much down you have, that could be 10% down to 50% down. Companies kind of work the same way. Most companies are either financed with some form of equity or some form of debt. Now, the problem with companies is that specifically at the earlier stage, it's much more difficult to lend a company money than it is to lend money against a physical asset or an asset with a tangible value. So real estate's kind of simple because usually you have 10 homes on a block and you can look up on Redfin what all those homes are worth and you can figure out what you've paid. And if I'm a bank or a lender, I can say, well, the house next door should be worth 50, plus or minus 20% what the house next that I'm lending in. Companies are a lot different. So what becomes very complicated is there are a lot of different forms of investment. A lot of people will raise debt that then becomes equity if something transpires. And usually at an earlier stage company, that's what a lot of transactions structurally become. On the capital market side, I think, again, it's really simple to look at things in terms of two buckets. There's public equity capital markets, so stock markets, New York Stock Exchange, NASDAQ, OTC Bulletin Board. In Canada, there's the CSE, there's the Toronto Exchange, there's the Toronto Venture Exchange. I'm sorry, I have this thing where I can't, we'll get it out of the way here. Hold on. There we go. I don't know how to turn it off.
I love it for our YouTube
Yeah,
subscribers
it's
there.
good.
Yeah.
So if you are listed or you want to become public, there are usually ways as a company to raise public capital as equity from public institutional or high net worth investors. Most companies in cannabis are private, and as a result, they have to take private capital from either private individual investors, private high net worth investors, or private institutional investors that usually show up in two buckets called called venture capital or private equity. And venture capital usually means that you're investing in an earlier stage or a risky venture that might not be proven or might not have revenue, where private equity tends to, and they invest equity capital, and private equity generally invests in things which are larger and are more established, and they want to consolidate them. So if you think about it, venture capital wants the uptick, and private equity wants kind of the slow and steady growth and the
The
consolidation.
reoccurring. Yeah.
Generally speaking, and there's the problem is that it's kind of like, I'm a car guy. It's kind of like modifying cars. Once you get out of the general 4 or 5 things, there's a lot of anything goes. So there's also a lot of anything goes, and that's why it becomes complicated. Further, in cannabis, there aren't a lot of investors. There's not a lot of capital available. So the pricing of capital is much more expensive. The access to capital is much more challenging. And the level of sophistication of a lot of the investors in the space is usually different. There's a lot more shady investors in cannabis and a lot more stories in cannabis that I hear, about lenders that are predatory. And there's some good ones, but it's just because of the scarcity of capital, it tends to lead to a higher level of nefariousness as well.
Yeah, and sophisticated investors are smart and they know what types of things to look for, right? And so, as I would say, over time, the last couple of years have been really difficult in terms of profitability and with the 280E and just heavier competition, and so it shook out a lot of investors. but there's still a lot of investors that may be waiting on the sideline, right, until things improve. And like, what would you say for folks that are trying to raise capital in the future as things improve? Like, what are some of the fundamentals that investors are looking out for in terms when looking at cannabis companies?
I think that if you are early and you have not yet commenced operations, so you have a tech platform, or you've spent money to win a few licenses and you need to build them, or you have a retail operation that you want to try and get off the ground, or you have a cultivation operation that you want to try and get off the ground. If you're in that early stage of you're trying to start the business, it's so hard that other than really trying to figure out how to get friends and family or people that believe in what you're doing to do it, I don't want to say it's impossible, but it's so difficult that those are projects that I just can't do anything with anymore. In 2014 to 2017, you could show up with a license and an idea and somebody throw you 20 million bucks. That doesn't exist anymore. So the first thing that I would say is that if you're pre proof of concept or if you're pre revenue in cannabis, I would caution those entrepreneurs to kind of question themselves. Why is this required and why is there a distinct competitive advantage to what I'm doing? Because the capital process is going to be brutal. I don't know how else to say that. If you are established and you have a business that is struggling for whatever reason, either it's struggling because it's very difficult to operate in cannabis, or it's struggling because you need more capital to grow, I think you also need to really assess in those instances, how can that be leveraged to my advantage or not? I think I've had a lot of success in working with companies that are generating revenue and close to generating cash flow or generating cash flow and helping them to get growth capital. It's been expensive and it's been challenging, but we've found debt capital for those people and equity capital for those people. I think once you get above a certain threshold, it's relatively, I don't want to say easy, there's capital available. It's just a matter of the pricing. So for the people in those second and third buckets, what I would probably say is, make sure that you have a business model that fundamentally can generate at the very least net income, if not net operating profit before interest and taxes, and a decent amount of it. And then the second thing I think you have to ask is the amount of equity that I'm giving up or the cost of capital that I'm paying for, let's just say, debt, which is usually like twice what a normal company would pay, is the growth trajectory that I'm going to achieve going to equate what I have to give up? And we are finding that works in certain areas and in certain markets. I'm also finding that there are 6 or 7 distinct types of business models that also seem to function very well in cannabis. So I think that's probably how I'd answer it. It doesn't solve the question of, I guess it's kind of like, what I struggle with is I meet so many people who have businesses that are just going to struggle either to raise capital or to be successful. And I feel bad for those folks, and I don't know what to do for them. And it's tough.
You raise it. You raise a good point, and that you mentioned there's a few business models that work. When I think of retail, and listening to some of the earnings calls that just came out, I heard the comment where there's a lot more opportunity in wholesale, but then not every retailer is going to be able to vertically integrate for various reasons, capital being one of them. And there's also the scalability, right? And so when you say there's various business models that work, are you referring to to scale and vertical integration, or what are some of the success that you've seen in terms of a business model?
I'm talking about generate net operating income before interest and taxes, period. That's what I mean work. Whether they scale, whether they vertically integrate, I don't really care. But we've found, 6 distinct models where if you operate correctly, you can generate enough capital to sustain yourself as a business. I'll give you a few examples of those. So one model that we've seen work is just straight retail. So there's a group in California called Embark, which has been relatively successful at just operating retail. It's all they do. They don't own their stores. They don't own brands. They don't cultivate. They just operate retail. They've been laser focused on it. They've also been either exceptionally skillful or exceptionally lucky in that most of the retail that they've won is in very limited license areas. Mm-hmm. That model works. They kill it. There's another model which we call the inverse asset-light brand. So you have a brand in order to, you have a base of operations somewhere. In order to go multi-state, you do a management services agreement to pop a facility down. So instead of spending money to build a facility, you effectively rent a facility. You bring your SOPs and you bring your sales team and you land and expand. So there's 2 companies that I think are the masters of that. A company called Timeless out of Arizona, which I have talked about inexhaustibly, which is probably the leading vape product in every single market that they are in, maybe except California, only because they're not really trying in California. They have a friendly relationship with a company that I have a tremendous amount of admiration for. Christine, I am begging for you to hire me again vocally. I'll send you the podcast. It's a company out of the Pacific Northwest called Grown, G-R-O with a tilde over it, edibles. I believe they're in 5 going on 7 states. They have 4 different SKUs, a chocolate SKU, kind of a Skittles SKU, a gummy SKU, and then a giant, like a Jawbreaker SKU. I'm privy to the financials of both of those companies, so I don't want to violate confidentiality, but I'm just going to tell you they kill it. Both of them kill it with that model. They're probably amongst the best run and probably some of the most profitable companies in the industry. So if we talk about, straight retail, inverse asset light brand, I'm definitely seeing people still do okay in just cultivation or cultivation plus a brand. So if we look at California, everyone knows I'm pretty involved with Glasshouse. I'm pretty friendly with the folks at Headwaters and big fans of theirs. I'm a huge fan of a brand called A Golden State, which is a brand and wholesale bulk product seller. Same with a brand in California called Pure Beauty. Again, I'm privy with Glasshouse to public information and historically to the other companies with probably more private information. But suffice it to say, all of those companies, all 4 of them function in the way that I've described. So, there's 3 distinct models. And there's a couple more where I can show you a bunch of companies around the country that work. And trying to figure out, for me, my thesis is I believe there's about 75 to 100 of them. And I've made it my point to find them all, to understand management with all of them, to become their friends, because those are the companies that I think are going to be the most critical and the most important in the industry as we move forward. I think the MSOs are going to be the MSOs, but I'm a biopharmaceutical historical person. When you look at the corollaries between pharma and biotech, all of these giant aircraft carriers in MSOs are going to need to do something in the future. And it's the Timelesses and the Grown edibles of the world that are either going to solve their problems or create problems for them if they're not doing so already. So that's kind of how I look at the vertical and the sector. And honestly, and I keep talking, so I'm sorry, why I'm so excited about the sector, right? You don't have capital. You don't have a lot of sophisticated investors that have any money really left other than the debt guys. You have 100 companies out there like Timeless and Grown, and either they're going to be consolidated at some point because they function, or they're going to be the platforms which underwrite consolidation. And again, I'm going to shamelessly plug Glasshouse. I am super lucky to be on board there doing corp and biz dev. They have one of the strongest balance sheets in the industry. And I believe that they are going to be in a power position for the next 2 to 3 years because of what they're doing. And given what I was able to do with ease for the 2.5 years I was there, to turn that into about the fourth largest private MSO in the United States, I think Glasshouse is going to stand the test of time as being one of the more important companies in cannabis because of the fact that they know how to generate profit and
Yeah.
cash flow.
And as you're reaching out to folks, Seth, I mean, what is, you're working with these companies, you're trying to find them. Um, how are you connecting? It's a small world. I know you're going to be speaking at conferences, but just from how does a company like that get to work with you? At what point in their development do they connect and reach out to you and see the need for a consultant such as yourself to kind of get on board?
A lot of it comes down to relationship and timing.
Mhm.
I have I do a lot of investment banking like things. Investment bankers don't tend to have a great connotation in the world, especially in our industry. It just depends, to be quite honest with you, Guillermo. I get a lot of people that want to work with me that I can't do anything for, and I feel bad about it. I want to be able to help a lot of people. I think just contact me. I try to get back to everybody. I am brutally honest. There are a lot of people who do not like that. I had someone reach out to me last week who's been a kind of a big supporter of mine on LinkedIn, and I think I said to him, and I'll just tell you because I'd love to hear your thought. I said to him, let me just see. I want to make sure that I got it. Now my computer doesn't want to work.
Well,
Anyway,
no, as you're searching through that, I mean, that's I can't remember which book it is that it talks about the best advisors, and that's like the number one skill is the honesty, right? Because they're coming to you to reflect, the truth of the situation and what's going on, and that brutal honesty is a big piece of that, right? And some people will come and some will go, but that's the job of the advisor is to
I
speak the
think
truth.
I think what I said to this guy was, I have a negative interest in this transaction on any level. And who do you think you are? How could you say this? Your opinion doesn't matter. Okay. So, some people don't want to hear it, but I just get too many things. And I guess at this point, like, there's too many things, Guillermo, that are just not fundable, right? So
Mhm.
again, I'm friendly. I'm an admirer of a woman in the industry named Sarah Stewart, and she's really putting herself out there to create lounges, right? And she believes that lounges are really going to work. And there's a cohort of people who really believe that lounges are really going to work. I hope lounges work. I really do hope they work. And several of them have come to me and asked me to help them raise money. And I've been very critical of that vertical, right? And it's less about the fact that I want lounges to work desperately, okay? But from an investment thesis, if I am interfacing with investors all the time who basically don't have any money and are trying to figure out what to do on their own, and you come to them with a concept that's never worked and it's in cannabis, like, the degree of difficulty on that is an 11 on a 10-point scale. So, like, that's an area where I so desperately would love someone to be successful and prove me wrong. and show that this is a model that can be one of my 6. But until it does, there's not a whole lot I can do with it. Another one that I'll tell you about is if I had $1 for everybody who came to me that's won a retail license and needs money to build it out, I probably have $6,000. It's so hard. There's a lot of people that have been awarded, licenses in New Jersey right now. I can't get money for retail for somebody who's never operated a store in New Jersey to turn on a store. I'm from the future, right? I've seen now what's happened in 16 or 17 markets, and it's almost the exact same thing that you can telegraph in every single market. So there's some models that just are so hard. I don't know what to do with. So back to your point of, how do you work with me? Reach out. I'm going to give you a look. I have a team of people that evaluate stuff with me and for me. But the stuff that I honestly work on is stuff that I believe in, that I'm reasonably confident that I can get done, and that I'm reasonably confident that we can all make money doing. Because if I don't believe in it, I'm out. If I can't get it done, I'm out. And if we're not all going to make money, that's not worth my time or their time. So that's kind of how we look at things. And unfortunately, the brutal honesty is that I've created this funnel of relationships and belief that I know how to do things. And because of that, it's created a very open door for people to access me, both on LinkedIn and directly through some of the speaking things that I've done. And it's great. I love it, but I just can't help everyone. And I don't know how to, not do that, I guess.
Yeah, not a bad position to be. So switching gears a little bit more into what's going on this year. I'm sure you saw the Trulieve announcement on the results from the IRS refund. That kind of points to, regardless of the reschedule, we could see more cash from refunds. And you spoke earlier about, well, the fundamentals being net income, generating net income. And when you say net income, are you referring to, sometimes there's two definitions, pre-tax profit or after-tax profit, but we'll certainly see an increase in after-tax profit just from a potential reschedule, or if anything comes out of this Trulieve case, we could see other MSOs kind of doing the same thing, or maybe there is something in the tax law that it's really, really interesting if you read kind of some of the approaches that some have taken to 280E, things like it's not deductible in the current year, but it's read in a certain way where it's deductible, certain costs are deductible in the follow-on year. But I say all that not to get so much into the technical tax stuff, but to see, do you see an outlook in maybe additional capital simply because it may be easier to get to net income with a better tax situation in the year? What's your opinion on that?
So you asked me about 3 questions there. So let me see if I can try and unpack them. All right. So the first is, what do I see for the year? Right. Is that fair?
Yeah.
I think it's going to be a challenging year. I hate American politics. I have zero faith in our elected officials on either side of the aisle. We seem to be fighting more than we're agreeing on anything. And because of that, I think it's going to be hard in the broader political climate to get a unified cannabis agenda. So I think the dysfunction in our elected official system holistically creates a more challenging environment for our industry. So that's one. 2, I think you're going to see continued dysfunction in California. I think it's going to get worse before it gets better. I think I've been very vocal in saying that there are 15, 16 retail operators that are the equivalent of about 220 doors. And I think 4 of them are going to go away by the second quarter of this year. And I write already that MedMen has pretty much gone. And I think you got 2 or 3 others that are clinging. So I think that's going to happen. You definitely have catalyst state positioning in Florida and Pennsylvania. If Florida goes rec, you're going to see a gold rush there. I think that will be interesting. I think, at the federal level, man, I heard what kind of happens is like on a Monday, I'll start to get like 8 text messages like descheduling is happening this week, and then all of a sudden, and then it doesn't happen. So I'm not convinced that anything is going to happen. Maybe Biden squeaks something out before he gets thrown out or handcuffed out or storms the palace and wins. Like, I don't know,
Carried
but
out. Yeah.
whatever. Either way, I'm not optimistic that you get change. So I think it's just going to be continued sledding. I think in addition to the 6 models that we think work, I think there's about 9 states that really function. Missouri is one that seems that I'm waiting for it to go like this, and it hasn't. I think a lot of it's because of the flat taxation that they've created there kind of creates a field where you can actually make money. And so I think you have kind of continued tough sledding. As it relates to 280E and Trulieve, very interesting development there. I am an information junkie. I am also someone who usually disbelieves headlines. So the headlines, awesome. When you get into the granularity of it, you have no idea other than the headline what they did, how they did it, or how it manifested. And I've read the press release several times, and they have very flatly and very distinctly said they are not commenting on whether it is federal or state government refunds. They've also said they're not outlining anything that they've done because Kim said it was a trade secret and that it is due to their specific position and organization. Now, one thing that I will tell you, if I'm going to bet, is I'm going to bet you that the majority of that refund is a state level refund and not a federal level refund. Kim owns that state. Her husband went to jail for her for things that company did in that state. I know for a fact that when regs dropped, they were the very first people to have product on shelf in that state. She grew up there. She's from there. She's plugged in there. She runs it. So I think and more power to her, right? I think we don't have enough to unpack it. I do think that if it was a ubiquitous loophole, I I usually think that most corporations aren't smart. They're just risk averse. So if she found magic beans, then why isn't Cresco, GTI, and all the other the
Yeah,
big 5, why aren't they doing
exactly.
the
And that,
same thing?
yeah,
Right?
and that was going to be my comment when they said, the trade, is a trade secret. My thought is they're expecting a challenge on it. And so it's too soon to tell. But I also would say some time will tell if any other MSOs follow on, and if anybody else follows on and files a similar claim for a refund at that level and it becomes public, then I think we can start to see, okay, there might be something there. There may be this loophole or this way around it. Um,
Now, to your point, if or when, and I'm not going to make a holistic statement on what I think should happen. I think cannabis should be federally legal. I think if the best that we get is Schedule 3, it's a first step. I'm not happy with it, but it'll probably be where it lands. I do think that, and I don't know if that means safe banking and blah, blah, blah. I do know one thing. I do know that if 280E goes away, you're putting several $billions of cash back into the industry that's being taken away. I'm moderately active on LinkedIn. A couple of months ago, I reposted some really good information that came from an investment bank. I think it was from Needham, that showed the effect of 280E on corporations, generally speaking, and then corporations in cannabis. And basically you get 25% of your cash back. It also kind of showed the effect of what if someone like Home Depot had to pay 280E, and like it's mind blowing. So I think if you do get a situation where 280E is lifted for the industry, forget about what Trulieve has done, because I'm not convinced that that's anything other than a really nice headline for them. If you look at what it does for the industry, I think it does two things. I think that cohort of companies that I'm talking about that's working, and we can loop back to one of your questions about how we define working. One of those companies that's working, if you got a $20 million revenue company that's doing 7 to 10% after tax, true after interest net income, right? And you put another 20% cash on the balance sheet, that's like a non-dilutive $2 million financing. Think about that for a $50 or $100 million revenue company. That frees up a lot of cash in the system. To your point, I think the way that I look at things in cannabis is net operating income before interest and taxes. Are you profitable at that level? If you're not profitable at that level, you ain't going to be profitable at the other two levels. So, if that net operating income before interest and taxes is a positive number, if you're not borrowing money at 17 to 20% and you're paying your taxes, you're probably net income break even to negative, which is probably still okay. There are some people who pay all their taxes. There's some people who don't. I think if you have the capacity to pay most of your taxes and put yourself on a plan, that's, I think, the most prudent way to do it. And I think depending upon how much debt you have, there's ways. There are companies that I do see that are true net income positive after interest, taxes, depreciation, and amortization. There's not a lot of them. There are other companies that I've seen that are free cash, that are cash flow positive, meaning they put cash on the balance sheet on their cash flow statement on a quarterly basis. I consider that to be, a cash generator as opposed to a cash user. So I think it's a couple different ways to look at it. But really normally what I'm looking at is that net operating income before interest and taxes. That's got to be a plus. If that's not a plus, you're DOA.
Yeah. And do you have some benchmarks and how, it really depends on the market and the vertical, but do you have some benchmarks on gross margin and overhead that you're looking for? Or what would be an optimal, or are you
No,
taking that on a case by case?
I'm taking it on a vertical by vertical,
Mhm.
right? Because if you look at someone like a glass house, they have 3 different business units. They have cultivation, they have brand, and they have retail. And each one of those business models are going to operate on a different number. So what I tend to do is I kind of look at the 6 that we talked about, and I try and come up with a benchmark for each of the 6 and apply that, because I think, and again, I'm certainly not the smartest guy in the room, in my experience, pure cultivation pound for pound seems to be one of the more profitable business units. If you have cultivation at a small amount of brand, that also seems to be a very profitable business unit. If you have the right asset light brand, inverse asset light brand, that also tends to be a profitable business unit, because you're basically able to buy distillate. And if you haven't overspent on your manufacturing and you have a great product and you can sell it, that's usually a decent outcome for the right person. You got to have scale, though. Most of the companies that I talked about in Gruen Edibles and in Timeless kind of dominated their initial markets. Timeless in Arizona, Gruen Edibles out of Oregon, and were able to build a cash flow base. Both of those companies also, interestingly enough, kind of have the same story, which is they're totally privately held. controlled and run by founders, have almost no outside capital, and have underwritten what I tend to call the cigar box mentality. If there's not cash in the cigar box at the end of the week because we've made money, it's not a decision we're going to make. So both of those companies have fundamentally made decisions that are only going to be profitable. And that's also something I don't find a lot of times in cannabis.
Yeah. So Seth, as we're coming closer to the end of the show, I mean, I think you've shared a lot there in terms of, what are the the benchmarks to look for, and we like to share those success stories, right? Because we just hear so much in cannabis on the difficulty, but you've really identified, like with the inverse asset light model and the different things that you talked about, there are success stories and there are ways to build a business model. So I appreciate you sharing that with our audience. So as we're coming closer to the end here, wanted to just say, are you going to be? It's always great to connect in person. Are you going to be at any upcoming conferences or places where we can find you? For those who might be looking to connect.
Matter of fact, I am. I'm going to be at Hall of Flowers in Ventura, California on the 13th. I'm speaking about the power of LinkedIn, which is, I think, how we connected. And I will be speaking again at the Benzinga conference, which is in Hollywood, Florida, I believe, on April 16th and 17th at the Hard Rock Resort, which is outside of Miami. And I'm not sure what I'm speaking about there, but I will be there with beads, rings, and bells on for 2 days. So anybody who wants to see me, I'm more than happy to spend some time and devastate your mind with how bad your idea is.
Great. Seth, I thank you for being on the show, and I won't even ask where to find you because I'm sure we can find you on LinkedIn, and that's how we connected. Is there any other closing thoughts, anything you want to leave with our audience today as we wrap up here?
Well, you can find me on LinkedIn. I have a website for my firm, which is called Katan Associates. You can find some propaganda about me there, but I would just say look me up on LinkedIn. Hopefully I'm the first thing that's coming up in your feed. We're spending a lot of money on that. I'm kidding. No, just I love this industry. I love the newness of it. I love the growth in it. I would say that all new industries are very difficult. Cannabis is exceptionally difficult because of the lack of capital. And until that changes, it's going to be difficult. For me, that creates asymmetrical opportunity. And for me, it's why I am leaning into this market harder and more vigorously and deeper into the future, because I think we are going to have some amazing outcomes long-term in cannabis. And I think ultimately you're going to be able to help people by doing it. And I'm also optimistic that in doing that, we can find a solution for the tens and thousands of people that are incarcerated currently for marginally doing what I'm and you are doing, now every day. So I think we have an amazing opportunity as a species to do a lot around this industry and this plant. And that's honestly what kind of excites me the most. So, what I would say to your audience is keep calm and carry on. The light's out there, might just be a little bit further out than we want it, but it's coming. And when it does, we can all be pretty proud about what we're going to be able to accomplish.
Seth, thank you. I think that's a great place to end and a great message to just keep calm and carry on. So again, Thank you so much for being on the show.
Thank you. Appreciate it.
Enjoy this podcast? Visit our website, anderscpa.com/virtual-cfo-cannabis to get more tips and strategy for achieving business success in the cannabis industry.